Hey everyone, and welcome. So, if you're a freelancer, maybe a sole proprietor, or running a business here in Portugal, there is a specific time of year that probably makes your heart skip a beat. And yeah, definitely not in a good way. Today, we're bringing you an explainer on a topic that notoriously causes a lot of anxiety: payments on account, or pagamentos por conta. Let's just dive right into this, okay? We're going to unpack exactly what these payments actually are, how they're calculated, and how you can manage the whole shebang without losing sleep.
Let's just tackle the elephant in the room right away. The burning question on literally every entrepreneur's mind right now. Is this just another tax to pay? I mean, when you get that notification from the tax authority, it for sure feels like a brand new penalty, right? Just another unexpected cost hitting your business, like the state is inventing new ways to reach into your pocket. But hold on a second. Take a deep breath, because the reality is actually quite different.
It really boils down to this: a payment on account is not an extra cost. It's just an advance. Think of it as a financial mechanism to advance the payment of the income tax you're inevitably gonna owe at the end of the fiscal year anyway. If you've ever worked a standard corporate job where taxes are deducted from your monthly paycheck, well, it functions exactly like that withholding tax. It's just the government's way of making sure they collect revenue throughout the year while keeping you from facing one massive, totally unmanageable tax bill the following spring. So here's our roadmap for today's explainer. 1. What is it? 2. IRS payments. 3. IRC payments. 4. IRS versus IRC. And finally, 5. Exemptions and limits. All right, jumping into section 1, what is it? The core concept. The absolute crucial thing to remember here is this quote: "The payment on account is not an extra tax. It is simply a portion of the tax paid in advance, which will be considered in the final settlement." So when you file your annual tax return next year, every single euro you handed over as a payment on account is deducted right off your final tax bill. If it turns out your business didn't do as well as expected and you advanced more money than you actually owe, the state will refund you the difference. Or if you advance less, you simply pay the remaining balance. See? It really is just an adjustment, nothing to panic about. Okay, moving on to section 2, IRS payments for independent workers. So who exactly gets hit with these IRS payments? Well, it primarily applies to Category B workers. Generally speaking, you trigger these payments if your turnover exceeds 15,000 euros and you're issuing invoices with IRS withholding. But here is a massive relief for you. These payments are calculated automatically by the Portuguese tax authority, the AT. You won't have to sit down with a calculator and sweat over complex tax codes. The AT uses a base formula applying a 65% coefficient. Because, they don't know what you're earning this current year, they look back at your income from the penultimate year, meaning 2 years ago, to estimate what you should advance today. They figure it all out and they just send you the bill. And they send those bills following a very natural, predictable rhythm. For IRS, your cash flow needs to account for 3 specific deadlines. Your first payment is due by July 20th, your second by September 20th, and your third is due by December 20th. Also, keep this helpful little administrative rule in mind. If the 20th happens to fall on a weekend or a national holiday, your deadline is automatically pushed to the very next business day. Easy enough, right? Let's shift gears now to section 3. IRC payments for companies. Now, I really need to warn you right here. Unlike the IRS for freelancers, the tax authority is absolutely not going to hold your hand if you run a company. The company, or let's be real, your accountant, is strictly responsible for proactively calculating the amounts owed and issuing the payment guide, which is known as Modelo P1, right on the tax portal. If you just sit around waiting for the AT to send you an automatic calculation, you're going to miss your deadlines and get hit with some pretty hefty fines. Proactive management here is an absolute must. So how do you actually make that calculation? Let's break it down. Your total advance for the year is based entirely on your company's turnover from the previous year. If your previous year's turnover was 500,000 euros or less, you calculate 80% of your previous year's tax minus any withholdings. Now, if your turnover was over 500,000 euros, that percentage jumps up to 95%. Once you have that total amount, you simply divide it into 3 equal installments. So, to put that into perspective, if your calculation results in a total of 3,000 euros for the year, you're looking at making 3 payments of 1,000 euros each. Make sense? And when exactly are those IRC installments due? While looking at the IRC calendar for companies operating on a standard civil year, notice how these dates slightly differ from the freelancer rhythm we just saw. Your first payment is right at the end of the month, July 31st. The second is September 30th, but pay really close attention to the third payment. It's not at the end of the month. It's actually due by December 15th. Seriously, mark these in your calendar because missing them means you're paying compensatory interest. Nobody wants that. All right, moving into section 4,
IRS versus IRC, the crosswalk.
Let's quickly summarize the key operational differences to make sure we've got this locked in. The core philosophy is exactly the same, advancing tax to the state. But the mechanics? Totally different. For IRS freelancers, you have the luxury of automatic calculation by the tax authority, and your deadlines always faithfully fall on the 20th of the month. But for IRC companies, the burden of manual calculation falls squarely on your shoulders, and your deadlines are pushed to the end of the month. Well, with that one sneaky exception, closing out the year on December 15th.
Which brings us to our final part, Section 5, Exemptions and Limits, or as I like to call it, the escape hatch. First off, let's emphasize this magic number, 200 euros. For companies, if your net tax collection from the previous year was under 200 euros, you are completely exempt from making these advances in the current year. It's a nice little break. The state recognizes that for very small tax burdens, the administrative effort of collecting these tiny fractions just isn't worth it for anyone involved.
But what if you don't fall under that handy exemption? Well, for both freelancers and companies, the first two payments in July and September are pretty much mandatory. But that third payment in December, it actually has some built-in flexibility. Here's how it works. Step 1. Carefully estimate what your actual final tax bill is going to be for the current year. Step 2. Compare that estimate to the 2 advances you've already paid plus any withholding taxes. Step 3. If the payments you've already made fully cover your estimated tax for the year, you can legally suspend the third payment. This can be a total lifesaver, providing some vital cash flow relief right before the end of the year. I do have to give you a big warning here, though, specifically about a 20% penalty margin. If you confidently suspend your third payment, but when you file your taxes next year, it turns out you, underestimated your profits, the tax authority is definitely going to check your math. Actually, scratch that. If the amount you failed to pay in that third installment is more than 20% off from what you actually ended up owing, the tax authority is going to slap you with compensatory interest. You absolutely cannot just guess here. It requires rigorous, really careful financial planning. And that brings us to our final thought. Understanding the logic of these advances really transforms a dreaded, unexpected obligation into a predictable pillar of your financial stability. Whether you rely on the AT's automatic billing or your accountant's master spreadsheets, knowing the rhythm means you are never caught off guard. So I'll leave you with this question to chew on. Have you planned your cash flow for your next payment? Honestly, right now is the perfect time to log into your tax portals, check your previous year's metrics, and make sure your treasury is ready to go. Thanks so much for joining us for this explainer, and happy planning.